Hi, everyone, and welcome to IDC's Digital Innovation and Connection digital event. This is the Financial Services track, and my name is Tom Zink. I'm an IDC Research Director for Financial Services, and I'm leading the European team. Today, I thought I'd talk a bit about technology, obviously, but with a longer time horizon. Obviously, all of us have heard a lot about the pandemic and how it's changing IT priorities. But today, I wanted to take a time and look a little bit further out and talk about some of the key trends that we are seeing and expecting to really transform the financial services business in the digital 20s. And for me, that means ultimately three major trends. First will be, and I think that has been going on for a while now, the transformation towards data-driven finance. So we have been talking about data being the new oil, but essentially I think data will be much more important, and it's probably more correct to call data the new water. Every aspect of a financial service institution will rely and depend on their ability to make smarter use of data, and also the ability to bring in data from the external world to really make smarter decisions, to enrich your internal data, and really be more customer centric and more smart about the decisions you're making. The second major trend I wanted to talk about is ecosystem finance. So we obviously have seen how COVID-19 has propelled financial services into the digital world. I'm not saying that we didn't have digital before, but today it's really a different world where digital is not longer a choice. It is essential, the essence of how we engage our customers. And this is likely to stay. I mean, surely after the pandemic, branches will remain, but still the focus and the progress that we are making and getting people hooked on digital channels and the experience and the convenience that they are getting through that will be essential to really succeed in this more digital era that is about to hit us. And that means financial institutions really need to reinvent their digital offering. They need to reinvent some of the business models that they have been successful with for many, many years. But clearly, digital is changing a lot of those dynamics. And we see already how product commoditization, how margin compression, how so many different items are making it much more difficult for a financial institution to succeed with traditional business models. The last one is a really critical one, and that is obviously come a little bit into the back burner as the COVID-19 surge, and that is green finance. Climate change is a reality. We all know that, although some may still not agree that it's happening, but we see it happening every day. And banks also need to do their part to become greener. That not only means internally, but also in terms of how they support and enable customers in becoming more green, and also to some degree penalizing those that refrain from becoming green. So let me start with the data-driven finance and quickly go through some examples where we already see financial institutions becoming smarter and becoming more data-driven. So one key point is obviously around customer engagement. And it really shows that banks and financial institutions are using data today in a much smarter way to create new product and advisory strategies for its customers. So it's not about as much about pushing a particular product to the market, but it's about being there when the customer has a financial need. Product is becoming secondary. What's the primary goal is to really help customers address important life cycle events or important stages as they go through their digital transformation or as they go through a crisis. So the bank or the financial institution is increasingly becoming an advisor, a relationship, a trusted partner to enable business outcomes rather than just pushing products to the market. Risk, security, and compliance clearly are some of the early onsets where we see organizations becoming a lot more data-driven, simply because it increases the reliability, the scalability, and also the ability to move towards a more evidence-based approach, which is particularly important now in the current regulatory environment, where regulators are increasingly getting tired of banks promising to address KYC, to address money laundering in a better way. Yet still every other month we find ourselves in a new scandal where banks, sometimes willingly, sometimes not willingly, supported anti-money laundering or at least enabled it. So what are we recommending our customers? First, I think that is probably the most important one, be patient about it. This is a marathon. It's not a sprint that comes as we mature towards these data-driven organizations. And it's really about taking into account that the difficulty of creating and managing complex environments of data. This is an initiative that will take multiple years. And it also is smart for an organization to really prioritize projects on the strategic needs. So compliance very often is such a big pain point because the penalties are becoming so high that for some organizations, it's really prohibitive to continue to go about their business that they have in the past. So it is really start small and then expand once you mature and build new capabilities. Artificial intelligence and machine learning are critical enablers of this data-driven transformation, but they are only a technology solution to solve or to facilitate solving that problem. As important is data. And I think banks have been investing a lot in their data transformation over the last couple of decades, yet still we're facing the same problems. There are data silos, there is poor data quality, there is poor data governance. And these are the fundamental issues that need to be addressed first to really drive value with fancy technologies. So it really has to be a balanced effort to drive data quality and the organization's ability to manage data in a better way in line with all those new tools that become available. And the garbage in, garbage out principle applies. I'm sorry to say that, but it is the reality. And without really getting smart in the way we use and transform data, a lot of those initiatives will continue to fail. And that also means you don't have to do everything yourself. I mean, there are smart partners out there whose bread and butter it is to build smarter data models, to build new algorithms. And we already see how the competition for talent in this area is kind of emptying out the supply of talent. And if every organization goes out and tries to attract the smartest people themselves, it will be not a sustainable competition. And the industry as a whole will probably suffer from it. Lastly, it's about bringing in new data, external data, and look beyond your own walls. And that really means ecosystem approaches, new strategies to bring in new data will be essential to drive value here. And it also needs to change the way we think about data. Data, particularly customer data, is not proprietary to our financial institutions. It's proprietary to the customer. And we need to think differently around how do I get consent from customers to deliver value to the customer. And I think this trade-off is something that we've been talking about for a long time, but I don't see many organizations really addressing consent in a smart way that really demonstrates value to the customers. And I think this will have to be a priority as we move mature in this data-driven transformation. Secondly, I wanted to talk about green finance. And this is really an essential component where banks have to transform massively internally in terms of using more sustainable technology investments, for instance, blockchain, AI, and quantum, but also reducing their own carbon footprint and looking at the data center efficiency and where they source data center resources. Obviously, the external component is a little bit more striking, and that is really factoring in the cost of climate change. And we see already how insurers are looking at data models differently to really price the cost of climate change in a better way. But it's also about helping or forcing customers to consider their carbon footprint. So customer due diligence, customer selection will become more important as organizations will try to do their part to get their customers to become greener as well. Lastly, that also goes into the direction of environmental risk and as a sustainability criterion, because those companies that do not transform, that do not think in a green way, they probably will not stand a big chance to succeed in this environment and in the prerogatives that we are facing as humans if they do not take climate change seriously. So that means they have a heightened risk to go out of business, and this is really something that banks and financial institutions need to factor in today already because of the long-term effects that their decisions today have on the future. And lastly, and that is quite obvious today already when you look at European Commission's plans on how to push for greener technologies or a greener environment. And that will mean more policies that really force financial institutions also to go down this route and become greener themselves. The good news is a couple of institutions are already going down that route. And some of the best practices that we see today, obviously, organizations that go out and say, we have clear targets to reduce our carbon intensity in lending, or we reduce project finance for coal, oil, and gas companies. It's also about developing greener products themselves, so green investment funds, green mortgage, green bonds, generally sustainability and green linked loans. So a lot of stuff that the industry can do today. We already see that green ETFs, for instance, are becoming a force to reckon with. So that is already starting today. Third, it's about partnerships, and it's really about first, obviously, engaging with the regulators and policymakers proactively to really prepare for what they are planning to do and also drive them in the right direction as they are also new to this transformative powers. Also means obviously participating more actively in climate initiatives, whether that's planting 1 million trees or other industry-related initiatives. That is really up to the individual organization. And lastly, it's tying back to data-driven transformation. So we need to get smarter about what is going to happen if temperatures change by 2% and what's the effect it's going to be having on my business. So more scenario modeling, better data-driven insights into how climate change will affect my business will be very important to prepare for this new future. So as recommendations, clearly infrastructure modernization is a key component of that. Cloud provider has certain, or is investing continuously in having the most efficient data centers. Scalability is there. You remove redundancy in your own data center because you don't have to have over-provisioned your own resources if you do stuff in the cloud. And cloud providers themselves, they are making big announcements that they want to go climate neutral in the next couple of years. So there's also a lot of change happening on the provider side. Second, evaluate the climate impact on some of the new technologies. And I think the best example for that is obviously blockchain mining. And it was an interesting concept when it came out, but it's completely ludicrous to inject friction in a mechanism so it consumes more power. And that's what blockchain mining is ultimately doing. So it's a flawed concept. Similarly, some of the operating principles that we have been deploying on how we store data, for instance, is not sustainable. We need to weed out, we need to delete data that's no longer accurate, that's no longer needed, and be more efficient about how we store data. Lastly, factor the carbon footprint into your lending model. So really incentivize companies to become greener themselves, not just to be a do-gooder, but also to future-proof your own business and limiting the exposure you have to potentially non-future-proof industries. And with that, I want to quickly move to the last area, and that's ecosystem finance. And that is a big topic by itself, because what we're talking about nothing less than transforming hundreds of years old business model that has been highly successful, and really shifting and bringing that into the digital era, into this ecosystem world where it's going to be fundamentally different success factors that will determine if a company thrives or goes out of business. And this is a very rough business model that we have built, where we think three key areas where financial services institutions will play in the future. First is around the product provider. So that is a bit the business model that we've been having today, where an organization is distributing its own products. The next one is around moving into this advisory relationship with the customer. And instead of just being a product provider, become a trusted advisor, become a trusted partner to help customers achieve business outcomes in a better, more efficient way, and also be recompensated on the success of the customer. So a much more aligned prioritization of the customer and the bank's or financial institutions' goals. And thirdly, there will be platform players, so organizations that are distributing products, that are providing services in a different way, where they are ultimately, again, a service provider, being compensated for transactional services, not by pushing payments around, but by delivering services that help customers address specific outcomes again. And the key three components of this will be obviously the ecosystem. It will be essential to drive automation to succeed here. And again, it will be a data-driven organization that will succeed here. So some of the transformations that we see today already are around marketplaces. So a great example I always think is Deutsche Bank, who is using a fintech solution to distribute interest rates, or to give their customers access to higher yielding interest products from other banks across Europe. Because in Germany, banks do not, largely don't pay any interest any longer. So a new way of delivering value to the customer, while also opening up some new revenue streams, because as the intermediary, Deutsche Bank earns from the bank who is finally getting the deposits. Platforms are a logical extension of that, or are basically the foundation for that. So giving customers or giving third parties access to your own product platforms, and then also think of new business models such as anything as a service, where the bank is becoming a service provider to customers, such as banking as a service, or treasury as a service, or identity as a service. And we already see how some organizations are gaining traction in this market and essentially become technology providers and service providers to their customers. Third, around advisory, we see the rise of robo-advisories, we see the rise of treasury advisories. So the advisory function is clearly something that customers are looking for in these new environments that have a heightened degree of uncertainty, and everybody is looking for advice. And this is clearly a value proposition that could be quite interesting for banks if they manage to transform and eliminate some of the conflict of interest that have been apparent over the last decades. So let me end here on some of the ecosystem finance recommendations we've been thinking about. Infrastructure modernization clearly is a part of that again. So we need to become more efficient, more cost conscious in how we run our infrastructure. We need to be thinking about how we can externalize more of the services that we've been having. And clearly, clouds will be a tool to facilitate, accelerate, and scale this transformation. And that goes hand in hand with hyper automation and analytics to really deliver these new services without errors and scalable, and in a flexible way that's also enticing to customers to really build these new value propositions. Advice over product excellence, I think it's a no-brainer. We have to remove those conflict of interest that we are seeing that are still in the market today. And we already see how outcome-oriented remuneration, independent advisory are being increasingly picked up by customers. We see how regulators are also going down that route. So if you followed in the US, there is a massive regulatory push at the moment to eliminate conflict of interest for investment products, for instance. But it also will take some time for customers to embrace this change. So I think we need to be patient here as well, and it will be a long time. That means today's business model will not go away overnight, but increasingly we need to think about how we can supplement today's business model with these new future-proven advisory models or anything as a service models to really diversify our business. And lastly, branch transformation. I mean, I think it's becoming a big topic. Again, we have seen branch closures around across the continent, but branches still have a valid role to play in the channel distribution because a lot of customers still want that human contact. So we cannot just eliminate them, but we need to think about smarter ways and more cost-efficient ways to drive or to deliver branch experiences. That can obviously mean more high-tech branches, more advisory-focused branches. The recommendation I give here is don't just do a flagship branch and keep the rest as the same. I think this transformation is something that needs to be rolled across the entire network instead of just being rolled out in certain prototypes. And I think one thing that's really clear to me, and we already see some organizations trying to develop synergies by sharing branch real estate. So yes, we see, for instance, a lot of community banks partnering by offering, by sharing the branch and therefore reducing the cost. But this is also, that it doesn't have to be exclusive to the financial sector. It can also be looking at partnerships with retailers, with fashion outlets, with telco companies, pretty much anyone who still has a branch network but is facing the same transformational challenges that more and more is going digital. There is a lot of synergies that can be developed here. And the earlier you move, the better your options will be. So we recommend obviously to start looking for the right partners today. And with that, I want to end today. Thank you so much for bearing with me and thinking a bit further into the future. And I hope this will help you to address some of the macro trends or to identify some of the micro trends that we see transforming the industry. It's only a matter of time until these really generate more momentum. So I think it's really important for organizations to prepare for them already today and build the foundation for these. With that, thank you very much. It's been a great pleasure, and have a great day and enjoy the rest of the conference. Thank you.